We have just recently discovered a new stock that has high-yielding dividends. If you're unsatisfied with the previous list, this pick may just be it. Why not sit and listen to what great news we have for you? We'll be looking at a high-yielding dividend stock in today's video since it just made a very unusual decision. It changed its distribution schedule from paying shareholders quarterly to paying investors monthly. Additionally, this led to the company's decision to raise its dividends slightly. The fact that this firm currently yields 9% is fantastic, and its balance sheet indicates that its stock is undervalued compared to its current trading price. The stock we're examining today is SLRC, which stands for SLR Investment Corporation. SLR is a business development firm focusing on strategic income-oriented control equity investments in middle-market firms and secured debt subordinated debt growth capital. The corporation invests in various sectors including asset management, automotive, aerospace and defense, and air cargo transport. SLR typically puts between $5 million and $100 million into any deal it agrees to. Whenever SLR invests, they typically only save 3 years' worth of reserves. SLR Investment Corporation, which is currently selling at $17.87 per share, has a dividend yield of 9.18% according to Yahoo Finance. They have announced their first monthly dividend, which will be paid to shareholders on May 3rd. It will be 13.67 cents per share. The corporation previously cut its dividend, but it was back in 2013, over 9 years ago. It's reassuring that there haven't been any more dividend reductions since then. SLR's most recent dividend hike occurred in 2018. The company nonetheless manages to provide an extraordinarily high monthly dividend if you are currently looking for some substantial income in your portfolio, either to live off or build up a dividend snowball, even though it doesn't offer much in a way of dividend growth. The recent merger is one of the reasons that SLR Investment Corporation is now paying dividends every month. SLR Senior Investment Corporation, a completely different BDC traded publicly under the ticker name SUNS, was recently amalgamated with SLR Investment Corporation. Shareholders authorized the combination in December last year, and the merger's effects are already being felt. A news statement states that the new SLR Investment Corporation has stakes in 125 businesses and more than $2 billion in assets. According to SLR, they anticipate that the two businesses' merger will increase access to loan funding sources with cheaper cost. They also expect the combined company's share to have better trading liquidity and appeal to institutional investors, potentially resulting in more significant equities research coverage. Additionally, joining the firm will further diversify their holding because there will be just one big company with wide range of assets, rather than two separate entities with small number of enterprises in their portfolios. The SLR Investment Corporation isn't like other businesses that focus on business developments. Most BDCs include Ares Capital and Owl Rock Capital offer finance to companies trying to grow or invest in businesses looking to restructure and require funding to remain operational. While SLR does make these kinds of investments, its asset finance section accounts for a sizable portion of its revenue. So instead of just giving these businesses essential financing, SLR may occasionally specifically provide finance for a particular piece of equipment. For instance, SLR may give a business the funding it needs to make one or more specific substantial and expensive investments that it feels will enable the company to grow its operations. This might be anything from a construction company in need of finance to purchase a new heavy equipment to a shipping company seeking funding for a new marine vessel, or even a forestry company looking to buy a new Cessna to assist them. Because of this, SLR wants to concentrate on where all the financings are going for a firm. As of September 2021, SLRC's investment portfolio is entirely secured, with 92.1% of those assets being senior secured. From what I can tell, this is substantially higher than a regular BDC. On the other hand, SUN's investment portfolio, which I think is rather impressive, is entirely made up of senior debt and senior secured debt. Approximately 29% of the investments made by the two entities in each company overlap when combined. SLR and senior investment corporations financed 29% of these companies before the merger. Given the overlap, I can see why a merger would be so alluring. When split down, we see that life science businesses make up 26.1% of their investment portfolio. According to their website, SLR invests in firms that are in final stages of developing drugs, medical devices, diagnostic software, and healthcare services. Generally, these investments are regarded as a more significant risk and higher reward opportunities. According to what I could gather, this is the portion of their investment portfolio made up of more conventional BDC investments, making up 26.4% of what they call cash flow. The companies they invest in will use the money for capital growth, leverage buyouts, acquisitions, and other purposes of which businesses would turn into a BDC for funding. Hence, this represents those companies. One thing to remember when looking at this company's stats is that the senior secured loans held by SLR are floating rate loans. SLRs will benefit from increased interest rates because their borrowers will pay them more in interests when the Feds raised interest rates. In addition, the balance sheet shows that their book value for the previous quarter was 19.93 cents per share. Due partly to the merger with SUNS, SLRC is trading at a discount to its book value, with a share price of 17.87 cents. We can see from the stock price performance that the company's stock price has decreased by about 55 cents, or roughly 2.99%, since its IPO in 2010. Not exactly good news, as SLRC is also down approximately 3.72% from last year. But this also ignores dividends. If we were to examine the performance of $10,000 investment made when this firm was founded initially, we would be purely looking at share price performance. We can see that if you had opted to reinvest all of your dividends, you would have ended up with an overall return of 202.63%. If you had kept the cash, your entire investment would have generated a return of 123.22%. Your average yearly return after reinvesting dividends would have been 9.52%, providing you with an ending sum of $30,273.49, with 1,693 shares of SLRC. You would receive about $231 a month in dividend tips at that dividend yield of 13.67 cents per share. That's a respectable sum from $10,000 one-time investment. And if you never put another dollar into SLRC, simply sit back and watch the snowball effect grow. To summarize what we've discussed, I believe SLR Investment Corporation is a good choice for a BDC. Although it's not one of my favorites in this industry, I think this stock to be quite ordinary. Compared to comparable BDC like Ares Capital or Penmark Park Floating Rate Capital, the share price performance isn't exactly stellar. However, these BDCs either don't pay out dividends monthly, or their dividend yield isn't as high. Since all companies' loans have floating interest rates, I think if interest rates climb, they should gain from extra money generated by these investments. I believe SLRC is a good choice and, at that very least, deserving of consideration as a small portion of an income portfolio if you're seeking an asset to live off the dividends. After some time has elapsed since this merger, I'm interested to see how this BDC will fare. But as usual, Do your homework and research before investing. Remember to diversify your portfolio across several investments and industry sectors to lower your risk exposure. There you have it, the final high-yielding dividend stocks. It was a very long series. What do you think about our stock picks? Do you want to add some of your picks too? Let me know your thoughts in the comments below. Always do your due diligence and practice calculated risks when entering the stock market. Once again, this is Investor Facts, ensuring that all your questions are answered. If you enjoy watching the video, kindly leave a like and subscribe. Until next time, cheers!